Aloha, everyone. We have another plethora of new long signals for Monday session. I really can't believe how many triggered, but it was a pretty strong day in the market with the Nasdaq up 3%, but almost 3%. Nasdaq 100 was up almost 3%, I should say. But if you look at the New York Stock Exchange, the Dow Jones Industrial Average, the S&P 500, and the Russell 2000, you'll notice it was nowhere near up that. So once again, since the lows, we saw the Russell 2000 initially start to lead. Then it gave way to the Dow Jones Industrial Average here. So the first month off the lows, you can see here, Russell 2000, boom. Then the Dow Jones Industrial Average, boom. Now it looks like it's possibly the Nasdaq's time. So it's a steady, constant, healthy rotation. But the health trend remains very unhealthy. The lack of any real pullback continues to give us nothing but stocks that V-shaped trend up ever so slightly and then big one-day down days shake us out of some of the position, not on every stock, but on a lot of stocks before going back higher again. And it's just a rinse and repeat overall. But that being said, most of the new long signals that I'm taking are working. At the same time, more are failing than before. The win-loss ratio has come down a bit the past couple of weeks, but as we move into earnings season, that's not too surprising. The most important thing to realize here is that this is not a healthy market. We are overbought on all of the indexes but the Nasdaq. Not only are we overbought, but bullishness is starting to get pretty high and bearishness is starting to get very low. We have a low VIX. And overall, it's just a dangerous time being in the middle of earnings season. So that being said, if you decide to go long any of the long positions this weekend, you should not be upset, sad, or mad if they fail. You should simply obey the stops, and if they hit the stops, take your loss and move on to the next signal. Now, if you've been suffering a string of losses lately, you simply start pulling back more and more until you start winning again. So you can either stop going long the new long signals, which I never recommend to always keep yourself in the flow of the game, and or you can start reducing your size per position. It's up to you. I know a lot of people don't like to hold a lot of stocks, especially as many as I hold. It does hurt your returns. The optimal portfolio is 10 stocks, 10% each, but this market really doesn't give us that kind of nice and easy, I guess you could say, asset allocation level. If we were selling off and after a 10, 20%, we were rounding, curling up from oversold levels, got that follow through day, and there were a few stocks out there holding near their highs and breaking out or producing actionable signals, then yes, we can load up in those and then know for sure that 3 out of 4 times they're going to work. So we'll have 3 that work, 1 that fails. But here it's going to probably be hit and miss. So with that being said, the safe longs this evening, or this weekend, is EGBN, the KMG add, the TTD new long, the EDC new long, and DXC new long. If you're looking to avoid the riskier signals, MCRE is a gap up earnings play support reversal. So is CSTM. Those are both speculative since they're extended from the 20-day moving average. Then you have CNCE, which is a perfect speculator name, IOTS, which is a perfect speculator name, and CNIT, which is a perfect speculator name. And as you can see, they're all lower price with CNCE at least being above 10, but being a biotech, so that means it's sketchy. But they're perfect speculator quality stocks, so they are worth going long. But really quick, let's go over those. The worst one, the ad signal CNIT, 130 limit, 122 is the first cut loss level, which is this low right here. And then the final cut loss level is 115 right here. But I don't want to pay up beyond 130 because the 5, 10, and 20-day moving average are not in the real body of the intraday price range. And then IOTS, this is a very nice ad signal right off the 50-day moving average. Candle over candle. All of these have that candle over candle or bullish candle reversal pattern. Heavier volume, BOP increasing right off that 50. I want to get long IOTS at 795. First cut loss right there, 740. Final cut loss right there, 705. It fails those 2 levels, I'll be out. So some tight stops. Getting back to CNCE now. 1665 is the limit order only that I want to pay. Don't want to pay up for. First cut loss right there, 1592. Second cut loss right there, 1508. So even though all 3 of these are speculative, higher quality names, at least they all have stops that are right there. If the stock doesn't move up immediately, we know that the pattern either needs more time and or is going to fail, so it won't be a whole lot of losses that we will incur before we know that we are wrong. And then on the new long positions, both CSTM and MCRI have the same kind of earnings gap up, pull back to the gap up, fill area, and then a big reversal on strong volume. CSTM comes with the BOP surge. MCRI comes with the BOP surge, the max green BOP. Both of these stocks are CanSlim and perfect speculator quality stocks on their own merits in different ways. They both also hit my new 52-week high scan on above average volume and my price volume BOP surge scan. So they're all the same, but CSTM, it's not quite the CanSlim and perfect speculator name that MCRI is. That's why it's $12 and MCRI is $44. But the same thing applies for both stocks. No chasing. So CSTM, want to get long, limit order 12.15, first cut loss right there, 11.25. Final cut loss, the gap fill at 10.95. So if it gap fills the 10.95, I'll be completely out of CSTM. MCRI, same thing. Limit order at 44.15. First cut loss, this low right here. Friday's low, 42.18. The gap fill the day before at 41.77 will be my final loss. So if it hits that, I'll be all out of MCRI. Now MCRI will get a slightly higher allocation to CSTM due to it being of higher quality, but I'm so maxed out with long signals, even though MCRI is at 3% and CSTM is 2%. The most I can put in any of these 3% plus signals like MCRI is 2.5%. TTD is a 4% signal, so that's only going to be 2.5%. EDC is a 3% signal. That's only going to be 2.5%. And speaking of those names, those are the higher quality signals, so let's move on over to those. EDC is from my perfect speculator scan. It was also in my ETF main scan. Want to get long EDC, limit order 115.19. First cut loss 109.74. And then since it's an ETF, I'm willing to put that second stop way back here at 180.85. Fails this first level on a heavier volume, whatever the new low is. That'll be the final stop. This is just an emergency level. The chances it fully comes into play, slim to none. This stock's going to have to pull back every day on lower volume each day with bullish intraday tail reversals if this low is ever going to come into play on EDC. Then TTD, this is probably one of the highest quality long signal. Huge earnings and sales growth in the most recent quarter. CanSlim quality stock. TTD is not only CanSlim quality, but it's in my main perfect speculator scan stock, or perfect speculator scan, so it's a very, very, very high quality stock. Limit order 64.13 since it's not extended. First cut loss right there, 61.51. Final cut loss, the pocket pivot point signal, big full body candle bar day, 60.03. This is probably the best stock out there, but not the safest because its price is not touching the 50-day moving average. For anything to be safe, what I would consider safe in this market right now, it's got to be touching the 5, 10, 20, and 50. Well, that's TTD. Very similar name, DXC. DXC is almost full CanSlim quality. It also has huge earnings and sales growth in the most recent quarter. This was flagged in my IPO scan after doing research on it, realized, oh heck, this is going to be a CanSlim quality stock soon with that growth in earnings and sales. Want to get long at 91.91. It's a little extended from the 20-day moving average, as you can see here, so no chasing. So 91.91. First cut loss 90.27. Final cut loss right there, 89.50. So two very tight stops for DXC. Once again, that's the main thing with every single one of these stocks. If I'm wrong, very, very, very small losses I will be incurring to know that I am wrong. And then EGBN, CanSlim quality stock only, not confirmed in any other scan. Want to get long, limit order 67.50. First cut loss level right there, 66.85. Final cut loss level also right there, 66.45. We're going to barely be losing any money if this stock doesn't move higher immediately. But it was only my CanSlim scan. It was also confirmed in my tertiary scan, so I guess it was in a second scan. And then the final higher quality long position, KMG. This is an ad signal. However, I went long back here. I was fully shaken out here. So while it's an ad signal for the website, it's a new long signal for me on my end. But the bullish candle over candle, heavier volume, even though BOP's going the wrong way, it's still green. MACD and RSI is confirming the curl. Want to get long, 55.51, the high of the day. First and only cut loss, 53.18, but you could use a second one here at the 50-day moving average. It's up to you. It's uptrending, so I'll probably do half 53.18 here, and then the final half at the 50-day moving average. Okay, that's it for the high quality long positions. There's also almost a handful of speculative quality long positions that will be available for platinum members on Sunday, but very, 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 very busy tape. Not safe if you're new and if you're sketched out the overbought market. Cash is king, basically, even though we're in an uptrend right here. Safest time to invest, once again, is a market that's pulling back, starts to curl from oversold levels with the RSI MACD confirming. You get a follow-through day, and the stocks, after the market's pulled back 10 to 20%, that look like this, that then trigger a long signal. So if this signal is coming today, TTD, after a 10% pullback in the market, and we had a follow-through day on Thursday, Friday, you can almost be 100% sure this one's going to break out and blast off higher. But with the market already overbought in an uptrend, this has just as much a high chance of failing as it does succeeding. So keep that in mind if you go long here. Position size accordingly. Obey those stops. Aloha.